Well, there's a look at the S&P 500 as we gear up for the trading day. And the reality is that there's been so much momentum for stocks over the last few months. But going back to that April sell-off, there was plenty of worry in the markets. Our next guest has generally taken a long-term approach to the markets. And going back to last fall, he thought that the S&P could climb to 6,700. We're about 5.5% away from that level now. But we were much further away from that level if you go back to late 2024. Brian Belski, Chief Investment Strategist at BMO Capital Markets, joining us here in studio. It's nice to see you, Brian.
Oh, John, it's great to be in Canada. What a beautiful day.
You seem so okay.
I'm very calm.
You always
today.
say good morning, Canada.
Good morning, Canada.
Yeah,
it's great to be here. Okay. I got my Timmy Hortons this morning. I'm feeling real. Well,
you made a real call on the market, and generally speaking, I mean, I'm not going to call you a permabull or anything like that, but you're somebody who has always been fairly constructive, looked beyond the noise. There's a lot of noise.
Yeah,
even today, there's still a lot of noise. But I think a lot of people, after the run-up that we've seen, are wondering what happens next. So how are you thinking about this cycle for the markets?
I'm so glad you brought up the whole notion of being a permabull and things like that. People, I think strategists come on and they put out a target and they put out an earnings assumption and a PE assumption, John, and I think the viewer doesn't really understand what that is. So we have intricate models that we've run now. This is my 36th year doing this, believe it or not. And one of the models, John, that has not worked is the macro model. And the macro model, if you think about this, so what is a macro model? A macro model in the market, you're looking at things like CPI, PPI, PCE, interest rates, oil prices, things like that for the U.S. market. We do the same thing for Canada. But the U.S. macro model has not worked since 2012.
So following what the data seems to be projecting out for the economy. Correct. And what that means for stocks?
Even if you project it out and then time lag it back, it has not worked at all. So what's worked? That's going to be your question. What's worked is more bottoms-up analysis when you're looking at all 500 companies in the S&P 500 in terms of their earnings trends, and then also from the evaluation perspective, not just earnings, but cash flow, book value, price of sales. And we put all of those into our model, not to mention our dividend discount model on the S&P 500, which has been expressly accurate the last, let's say, 15 years, and the majority of our 13 years at BMO. So I think a lot of people just say, throw out the number, and they don't really have a lot of, as you say in Canada, a lot of process with respect to that. And so we've been very blessed and fortunate to have a discipline that it's actually worked quite nicely.
Okay. So I guess one of the realities of the S&P itself today is that it is dominated by tech. And so maybe the question is, should we even be having that discussion? Does that discussion matter? It's about 33, the Mag 7's like 30, I think Bloomberg had some stats, like 33-ish percent of the entire index at this point. A decade ago, it was less than 10%.
Yep.
And in that run-up we've seen since last November, which, you made a good call on the market.
Thank you.
A lot of that comes from tech. There are other groups that have just not seen the same kind of participation in the market.
We could also go tick for tack for that, because then you've got a Canadian market where over 30% are 5 banks. So that's more concentrated. But let's go back to the U.S., because if you take a look at the S&P 500 technology sector, there are 60-plus stocks that you can pick in there. We actually are underweight the Mag 7. We don't own one of the Mag 7 stocks. And we've been more concentrated in other areas like Oracle and Palantir and Broadcom, which has actually helped our performance and helped us outperform, certainly over the last 12 months, but especially year to date. So I think in the technology space, I think that it's more diverse than in Canada, number one. It's actually the technology sector, if you're going apples to oranges or apples to apples in terms of comparing the technology sector in the U.S. versus the financial sector in Canada, there's actually more, the higher ability to diversify out in technology in the U.S. than there is financials in Canada.
Interesting. Well, even Apple, which wasn't part of your apples to apples, has like a component of financial services within it.
Correct.
If you think
And so I actually think this. I actually think that there's a very good chance, John, very good chance that the agencies, the index agencies, whether that's the S&P or Russell, are going to break apart tech into two different sectors within the next 5 years.
For the S&P?
And for the Russell.
And for the Russell. I mean, they're already bleeding into others.
Because remember, communication services used to be telecom, right?
Yeah.
But then they took Google, Meta, and put it in Netflix and put it in communication services to make the sector bigger, smaller.
All right. We're geeky. This is important stuff.
This is important
Very
stuff.
important in a world where everybody's doing ETF investing and all that kind of stuff.
Exactly.
But it is a bit geeky for us. So let's get back. I mean, the story yesterday in Canada, Shopify is back in the #1 spot for the most influential stock in the TSX, right along with a bunch of banks. So how do you feel about the makeup of the Canadian market right now, especially if people are just sort of buying the index, what you're buying, all that kind of stuff?
You know, the thing for us that we've really been saying is that that Canada affords investors with a much more cyclical and valuation bent relative to the U.S. If you think about awesome names like Restaurant Brands, QSR, and Couche-Tard, and Aritzia, and the Rails, and Waste Connections. These are amazing companies that I don't think people talk enough about, whereas obviously you have the Big Five and National, and you have this amazing company, Shopify, which we've been counseling investors since we came to BMO, and especially since we bought it almost 10 years ago. And we talked about that Shopify, we believe, does not have that inherent risk that many Canadians are worried about, that it's going to be the next BioVale or the next Nortel or the next BlackBerry. It's not. It's a very different company. And we think, given the fact that it is really the portal in North America with respect to small, medium, public, and private companies, we think this company is massively positioned for the next secular trend here and growth.
Okay, well, given its influence within the Canadian stock market, that opens the door to my next question, which is, you have target prices for the TSX and the S&P 500 that are higher than the levels we're at right now. We're pretty much around all-time highs. Those levels for Canada and the US, I think, are something like 2-ish% and 5.5% higher than where we are right now.
Correct.
Are you feeling like, depending on what the momentum story looks like, you're going to have to revise those targets, but that you feel like the momentum will continue?
It's a great question. We, of course, can't telegraph any of that, but at the end of the day, if we see earnings continue to come in as strong as they have been, we'll have to because the earnings are a very big piece of one of our models, number one. Number two, and just in terms of those percentages that you just talked about, John, we said May of 2024 that Canada was going to outperform. And Canada did in 2024 and actually did so far this year. We think at the end of the year, when we're looking at December 31st, 2025, we think Canada net will outperform, but the relative outperformance, the second half of the year, is going to come from the United States. You follow me? Mm-hmm. So I think the majority of the momentum upside is going to still come from the United States, but Canada is going to net outperform. But Canada is a wonderful stock picking market, and we do believe that as America goes, so goes Canada, which has been our secular theme for stocks in Canada. So we think that there's more upside, and earnings are going to be the key. And then lastly, we had a great earnings season in the U.S. We think a lot of those same trends, John, are going to follow through what we're going to see in Canada, especially in the big banks.
So despite you describing it as a stock picking market, are there areas of the Canadian stock market then, if you see potential more upside, that are worth highlighting to the audience beyond Shopify?
No,
like
I think
sectors, that kind of thing.
I think that the consumer discretionary sector in Canada has just been amazing and held in there quite nicely.
Like the Couche-Tards kind of.
Couche-Tard, Dollarama, Aritzia is one of our all-time favorite stocks in Canada. And I mentioned the industrial space in Canada is really interesting as well, because you have the rails that are earnings machines and operating performance machines in terms of return on equity and return on assets. But Waste Connections, I think, is an under-owned stock in Canada. It's an amazing company. And 80% of their revenues come from the United States, but this is just a juggernaut. The waste business is a really great business as well.
Trash can be a market
We're always trading trash, man.
Yeah, no, it is true, and GFL's been a big performer as well. Okay, so your message to investors is, could be some bumps along the way, but stay invested?
I think, well, I know this. You got to stick with your process and your discipline and stay invested. When the market was negative in April and everyone was scared, we say we own what we own. And that resulted, we're very humbled to say that resulted in the best quarterly performance I've ever had as a portfolio manager, best in the second quarter, because we stuck to our guns and owned our stocks. Buy great companies. And the theme's going to be this. Canada and the United States have awesome companies, wonderful companies. Stay home. There's no sense in going anywhere else.
Okay. Nice to see you.
Nice to see you.
That Tim Hortons coffee is kicking in
Man,
now.
it was amazing.
Yeah. All right, Brian. Good to see you. Brian Belski of BMO Capital Markets.